Okay, welcome everyone. It is earnings season right upon us. Within a couple days, earning reports are start to stream in. So that's why we brought in Sami Abusaad, the official king of earnings, to teach us his earnings system. So Sammy is going to go through a whole lesson showing you how his system works. Then we're going to come back with a little fun surprise for you guys. Before we get started, please read the disclosure on the screen. Make sure you memorize every word on it because it is all very important. So let me tell you about my friend Sammy. So Sammy is our Director of Education. He's been a pro trader since 2007. He runs Strategic Swing Trader, Strategic Day Trader, our mentorship program. He is an expert in core trading, day trading, swing trading, and he created the unique earnings play strategy, which you are going to learn about today. So some fun facts about Sammy. So Sammy is a former certified public accountant. People have paid over $5,000 to train with him, and they've flown into the US from Germany, Israel, South America, France, basically all over the world to work with Sammy. His $5,000 pristine mentorship programs have been selling out in record time. They are all sold out for 2024 because people love working with Sammy. And you get to learn from him for free today, which is unbelievable. So, Sammy, how are you doing today?
Doing all right. I'm blushing here. Thank you, Mike.
All right. No, Sammy is way too modest. He is the absolute king of trading, and that's why we brought him in so you can learn from him. So, Sammy, I'm gonna pop your slides on the screen, and it is time to get started.
I will try not to disappoint, Mike. Hi, everybody. Welcome. Glad to have you all with us. I guess I don't need to tell you about myself here because Mike has already done that. But I started trading in 2004. I went full-time in 2007. And my story is not very different than the typical story where in the beginning I got lucky. And then later on, a few months later, no, 6 months later, I think, when the market turned, I gave back everything that I made plus $15,000 more. So it's a very typical story. And only then I realized that I didn't really know as much as I thought I did. Being an accountant didn't really help me at all. And I started on that journey of finding out what I need to learn to make money on a consistent basis. And one thing about me is, I may not look it, but one thing about me is I'm very driven. I don't give up easily. I never give up almost. And I just, once I start on the journey, I'm just going to go all the way to the end. And so that's kind of what happened with me. I started scouring the internet for trading resources, and anything that didn't make sense, that wasn't like logical, rational, I would just dismiss it, right? And then until somebody actually told me, somebody on Zacks.com, which is a financial website similar to FinanceYahoo.com, told me that Zacks was running a trading challenge, and he was the number one, and there were hundreds of people in that contest because whoever won the challenge got $100,000. So he said he'd been a professional trader for like 15 years and learned it all from a small company called Pristine. And so that's when I, checked it out and found out that what I told myself was the logic was intrinsically valid when it came to the Pristine method, because it just made sense. As much as I tried to poke holes in it, nope, it was very objective. It made perfect sense. I adopted it, and the rest is history. Basically, I made it into my own style also. So I took it a step further, so to speak, made it my own. All right, enough of that. Today we're going to talk about the earnings season, because earnings season is upon us. I think JP Morgan reports on Friday. So that's the first big name of the Dow 30 that reports. And I wanted to tell you how to trade earnings season. There are 3 ways to trade earnings season. Do you know what they are? You should, but here they are. The first one is guerrilla trading, or what's known as entering, it's like a hit and run approach, a sniper's approach, entering before the company reports earnings and then getting out post after the report. That's guerrilla trading. Pretty risky because you're gambling on what the stock is going to do or how the investors are going to react to earnings. So it's risky, but we're going to talk about it. The second way to do it is to day trade the stocks, the companies that report. So, the next day, after they report, they're going to gap. The price is going to gap up or down, and you can trade the gap. And that's something that I specialize in when it comes to day trading. And then the third way to trade earnings season is by swing trading the pattern that forms after the earnings gap, because the earnings gaps are the most important. When do you think Tesla bottomed? It was after that earnings report. That's when it bottomed. And then that was the first, that was like a few months ago, 3 months ago, I guess. And then when they reported deliveries a few days ago, it also jumped again. So again, earnings gaps are really important. You can day trade them. You can get in them before they report, get in the stock before the company reports, and you can also swing trade the pattern that forms after the earnings gap. Let me show you an example, because this is something that I discovered on my own too. So you get a stock that's reported, gapped up, right? And so you play the very first pattern that sets up after that earnings gap. So in this case, breakout, and then a kind of like a little shelf, and then there's the breakout. That's on the daily chart, right? So this is swing trading, earnings gaps after the company reports. This is flex, gapped up, right? Cleared 3 months worth of basing, sat right on the 200, gave us a pullback, and then boom, okay? And so on and so forth. You'll see, I have hundreds and hundreds of examples of the plays that I've taken over the years, okay? But that's, the company reports, you look for the next pattern. Now, that's only if it's an igniting professional gap. If it's a novice exhaustion gap, you play it, you could also play it long in this case, but it's going to look different. The stock's going to be down a lot, and then you get a big gap down on high volume. That tells me that everybody that wants out is already out. And then you look to play the next pattern that forms. Okay? So that's another way to play earnings, is to see whether the stock is basically exhausted all the potential sellers, or it's igniting, a new move, and you play according. Look at the size of the moves that forms after the earnings gap. Just look at these moves. Amazing, isn't it? So I love this strategy. But believe it or not, we're not going to be talking about this strategy. It's one of my favorite swing strategies, but we're not going to be talking about it. What we're going to talk about today is guerrilla trading, which is how to enter into stocks before the company reports. Again, risky, but let me share with you how this whole thing came about. If there was, okay, 1 second, please. This is like the truest statement that I can make, which is that I truly did not want to share this with anyone. My discovery of how to play earnings. I truly never wanted to share it because I was afraid it would, enough people find out about it and it would stop working. But I was actually I had started a new program called Nightly Game Plan, which is Strategic Swing Trader, but we changed the name, right? It was called Nightly Game Plan. And every week I do a video to share with the subscribers to kind of highlight the highlights for the week and show them at the end of the month what I had made. And I did this video, which is still on YouTube, I think. You can go to this link or just Google Nightly Game Plan. I think it should be the first video that comes up. And that's in 2017. That's 7 years ago. And I did this video and uploaded it, and the subscribers watched it, and T3 noticed it. My bosses at T3 noticed, wow, this is an incredible strategy. Sammy just showed the subscribers how he made $78,000, 2 different accounts, one small account, one large account, after commissions, because we had commissions at the time. And this is a strategy that we've never heard of. So they asked me if I could like teach it and and put together a course. And then I did this video where I made 87,000. Again, there's the link if you want to see it, or there's the title, almost the best trading day of my life. I think this is the second best day. I know it's the second best day. I'm not including days when I make over 100,000 because I have a huge position in Bitcoin or Tesla, or I'm not including long-term trading, because there are days when I make 100 or lose 100 too in my long-term accounts. But this is for just doing earnings. Then this video came out, that video came out, so I was killing it, right? This is again 31K. And then in 2019 I felt like I really took it to the next level, because in just 1 month, and I didn't include any P&Ls that were under 7K. In 1 month, 30 days, I made over 300K in one month. 30 days, not it's not a calendar month. It was like from July 25th or July 24th or whatever, right? July 23rd through August 24th, something like this. In 30 days, I made over 300K from only the earnings plays. That's it. You see, everything is zero because I get in, and then the next day I'm out. And there's a $4,700 P&L. I meant to grab only things that were over 7,000, right? Only over 7,000. But anyways, so that was in 2019. So I felt like I really took it to a new level, and I decided, what, this is sharing is caring, or whatever. Happiness shared is doubled. I decided to start teaching it. And I decided that this is not something that can be like, even if I teach it with the world, they're not going to be able to mess it up, because it's based on the psychology of traders, based on the whole chart, based on the psychology of traders that are in the stock, based on the psychology of how traders are going to react to the stock the next day it gaps. It's not something that is going to get messed up. And no strategy that I've ever taught, lost its effectiveness because I taught it. And one thing about me that probably some of you don't know, while I'm a trader, by profession, I feel like teaching is truly my calling. I've always been a teacher at heart. Even in college, I remember I used to have like 18 2Ts students, and I would get paid. That's how I, made a living while going to college. 18 students, and I was just a student myself. So I've always enjoyed teaching. Anyway, so around the backstory, around 2010, I started noticing certain patterns that preceded most gaps that I came across during my nightly scan, because I scan every night. At first, I thought, I must be like making this up, right? So I ignored it. And the other thing is, I don't like to gamble, because I want to do things that make sense. Gambling, and hoping that the play works out, because, hoping to get lucky, that's not my style. So I didn't want to gamble on earnings plays by jumping into a stock before the company reports. So I really ignored it. And over the next 7 years, I continued to look into it and study it and make new discoveries and learn new things. But I took only 2 trades in like 7 years, 2 earnings plays. One of them was Netflix, and the other one I don't remember. And Netflix, by the way, is coming up. So I spent the next 7 years looking into and studying what I came to call the earnings strategy or the earnings play before I actually started trading it. On the downside, I missed out on a lot of money. On the upside, it did give me the confirmation that the strategy works, because it's worked in all kinds of markets: bullish markets, bearish markets, sideways markets. So it worked in every type of market. And then, kind of my big aha moment came about, and here it is. I started wondering, what is the common catalyst behind all these gaps? Because I started to notice all these gaps during my nightly scan. More importantly, can I be in the stock before the company gap, or the stock gaps, before the gap happens, before the company reports? But I didn't know at the time that it was, that the main catalyst was earnings. All these gaps that I sort of can predict turn out to be earnings gaps. Then came the most important question of my career. It's true. It's true, which is, since I'm a technician through and through, I'm not, even though I was trained and I went to school to and learn how to read financial statements, I don't look at the fundamentals at all, like not even one bit. So I'm a technician through and through. So can I use the only thing that I know, which is the atom or the basic unit, to trade earnings? And the answer was yes, I could. And I'm going to share with you how to do it. So you've all seen this by now if you've followed me for any length of time. But basically, the picture you see to the right is the only complete movement a stock or the market can make. There is no other movement possible. It's true. The entire life of a stock and or the market is comprised of this cycle repeated time and time again. This cycle forms the basis for one's ability to predict price movements based on the laws of psychology and probability. Cycle, sometimes referred to as the basic unit, helps the trader know the current status of the stock and the market, as well as what's likely to occur next, which is just as important. The key to trading successfully is knowing where you are or where the stock is in this cycle. The cycle is comprised of 4 distinct stages, which in turn are ruled by 4 distinct emotions. I don't want to get into it too much, but this is what the cycle looks like on a monthly chart. I'm using monthly charts because it shows you the whole cycle. But this cycle actually happens on every time frame, on the 1 minute, 2 minute, 15 minute, every time frame. It's just not as visible, not as clear to see, except on larger time frames. Monthly, daily, weekly. Sometimes, all these stocks crashed all the way back down to where they came from, right? Every one of them. Sometimes they don't do that. Like Apple doesn't do that. When it crashes, it comes in pretty hard, but doesn't go all the way back down to the lows. So you end up with the cycle, but not all the way back down. So you end up with stocks that are in long-term uptrends, monthly uptrends, weekly uptrends, quarterly uptrends. But you end up with stocks that I say those are the stocks that escape gravity, that become like Apple, whatever, Walmart, Microsoft over time. So, okay, if this is truly the only cycle or the only movement that's possible, which is like a wave, think of it like a wave. The water in the ocean, right? How does it move? It always moves in waves, always, because of the wind, whatever, right? And the gravitational pull, whatever the reason is. I'm not a physicist, okay? But in stocks, it's the same thing. It's a wave, right? Sometimes they move up straight up for a while and then they come crashing down. So it ends up being a wave even when it goes straight up for a while. If that is truly the case, then can we not figure out how to trade this wave? Sure, we can. When the stock starts to, when the wave starts to form, then we ought to look to play long right here. This is called transition A breakout. While the wave is happening, is forming to the upside, the water is rising, whatever, the stock is rising, it doesn't mean that you can't do anything with it and you have to wait for the next wave to form. No, you can ride it like a surfer. You can ride the wave, so to speak. So on the way up, we look for pullbacks and for base breakouts and other patterns too, but mostly stocks correct through time by going sideways, in which case you look to play long, the breakout, or through pullback, in which case you play that buy setup long. So we play the transition A breakout. We play the transition A doesn't always happen through a breakout, sometimes it happens through a pullback, and we play stage 2 uptrend through either pullbacks or breakouts. Transition B and D are similar in that the stock goes vertical a little bit, goes climactic, okay? So I'll show you, so when it runs out of buyers, basically. And then transition C is the breakdown, which is the same as the transition A breakout, but in reverse. So in this case, we'd be looking to play short. Stage 4, the downtrend, is the same as stage 2 uptrend, but instead of buying the pullbacks, we short the counter rallies. We short the breakdowns instead of buying the breakouts. So that's that's the basic unit, and those are the 4 stages. Stage 1, the base, and stage 3, the base at the top, hard to play. So I don't even try. I don't play stage 1 and stage 3. Now, again, T3 tasked me with writing a course, because this is brand new material that nobody's ever heard of before. And I called it the earnings engine. I think Mike actually came up with that name. And to come up with the course, I analyzed over 1,000 earnings gaps, narrowed the system down to 6 patterns, and created a criteria or a checklist, and then I started trading it. And that the first time I started trading it was in April, or trading the strategy was in April of 2017. Okay, so I have 7 years of experience. It's the least amount of experience that I have compared to the other strategies, but I've done over 5,000 trades that are tracked and available for you to view if you become a subscriber, right? So a lot of you are already subscribers, so you can actually look at the tracking. The trades have made like over 850,000 or something like this if you take 25,000 per play. Okay, so just I'm not gonna talk about the numbers, but that's what they've made. Okay, so as I said, based on the basic unit or the atom, whatever you want to call it, we have various strategies available to us. We have transition A, we have stage 2 uptrend. So here's the 6 strategies that I've come up with. Okay, and I want to show you how each one of them kind of forms or happens. Okay, this is a transition A breakout. So when the stock is transitioning, again, sometimes it doesn't happen through a breakout, it happens through a pullback. But notice the stock. So first, keep in mind that the red line is the 200 SMA, simple moving average. The blue is the 20-period moving average on every chart. Those are the only 2 moving averages that I use. Now, how can you tell the stock is in a stage 1? Well, stage 1 always comes after stage 4. If you have a declining 20 and price is under it, that's stage 4. And then when the stock is about ready to transition higher, the 20-period moving average goes flat. And once it starts to curl up a little bit, that's when you know that the stock is about ready to go higher. Now, not only that, this stock actually printed a red bar into earnings. That means investors were bearish on it. They had low expectations for it. Guess what? I am seeing the wave forming, and yet nobody's aware of it. Or people are thinking there's not going to be a wave. I can see it happening because I know how the basic unit works, and yet people are selling it. That's something I can take advantage of. So when you have low expectations for a really strong stock, when investors have low expectations, it's easy for the stock or for the company to gap up, right, the next day when it reports, because the expectations were very low. Now, what does that mean, the expectations are low? How do I know the expectations were low? Because the investors and traders sold it the day before earnings. If they were expecting it to have a stellar report, would they have sold it? No, of course they wouldn't have. So the fact that they sold it tells me it has low expectations. Okay, so that's easy for it to gap up if they even just barely meet the earnings estimates, whatever, right? And then I see that it's at the 20, so it's not extended, it's not overbought. And I also see that it's transitioning. Now I got a good one. And as you can see, it gapped up pretty nice amount. Now, as I said, sometimes the stock doesn't transition by basing. Sometimes you get that rounding bottom. So this is TMO. It's the same thing. I can see, you might say, this is an inverted head and shoulders. Whatever you want to call it, I don't care. It's just a rounding bottom. I see the declining 20, so that's stage 4, that's stage 1. And then when the 20 starts to point up, that's stage 2, right? And I notice that this stock, the company is reporting, and the stock is printing a red bar into the 20. I do like it more when the stock closes at the 20, as we saw right here, not below it, but it's fine. That 20 is not like a brick wall. It's an area, basically. So, it's fine. I played it, gapped a small amount, and then I figured out a way to manage earnings plays so that when it gaps up in my favor and keeps going, I can hold on to it. Because this was not such a big gap, but when you factor in the big move that day, then it's a big gap. Then it was a big mover. More of the same. Notice the transition happening, right? more of the same. So that's the idea on that transition A breakout. Okay. Hopefully that makes sense. The second pattern is the transition C. So when the stock is, turning downward, when the 20 MA is curling and starting to point down, okay, and investors are bullish on it. Now, they're not very bullish here. It was a small green bar, but that's okay. They shouldn't be buying it unless they had high expectations for a stock that is topping out. So there's that conflict, so to speak. So, okay, short. That's a good short, actually. And then on earnings, it gapped down. All right. Same thing, stage 3, stage 4, big green bar into the declining 20. That's a short. Gap down 20%. If you kept it, you ended up with only 5%, from 10 to 8, and then went all the way back up to 950. So the question is there a way to cover it somewhere in the bottom? I'm not saying right at the bottom, but somewhere in the bottom third, so that if the stock ends up getting bought after the earnings gap, you're already out of it. You already made 15%, 18%, 17%, right? So is there a way? And there is a way. Doesn't always work out perfectly, but more often than not, it does. Is there a way to, when the stock goes in your favor, gaps down, to hold on to it? Is there a way? Yes, there is. And look at that one, right? So this is the transition C. The transition B and D are a little bit more difficult. So I don't do a lot of those because you're basically shorting a really strong stock that's running up, right? So this is 4 months up into weekly or monthly resistance. This is Cisco, the food company, into earnings. That's a short. The expectations are sky high and was running up into, this is the daily chart, but was running up into monthly resistance. This is a bear stock that put in multiple green bars into that trend line resistance, short into earnings. You see what I mean? So expectations are high on a bear stock. That's a short. The expectations are high on a bear stock. That's a short. That's a short. Okay? More of the same. Now, the transition D is when the stock is falling apart a little bit, in this case, into support, into the 200 MA. And it's coming in really hard into earnings. That's a long. That's the opposite. Again, multiple red bars into support, into the rising 20 on the weekly. That's a long, not a short. Okay? That's, again, I don't do a lot of these, the transition B and D. This is something that I do a lot of, which is this. It's a cool pattern. So same idea. I'm looking for a bear stock that's run up into resistance, okay, into the declining 20 or into price resistance, but also has an unfilled gap above. It couldn't fill the gap. If the stock was unable to fill the gap, that's a sign of weakness. Okay, so that's a sign of weakness. Look at this. This is Columbia Sports. It went up, I believe, 11 bars. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 bars up, with the last bar being a topping tail into an area where it broke down really hard from, into all that resistance, plus an unfilled gap above. Oh my God. Like, this is, please, this is like, to me, this is telling me, please short me and short all you can. Now, I don't short all I can because I'm not a gambler. I'm a professional trader. I only do what I'm comfortable with, which I've also figured out how to size these plays properly using stocks, not options. I'm actually trading the actual stock. So how do you size it properly? I figured out a formula to share sizing it properly. So, but this is like so good. It's amazing. If I ever see something like this, I'm betting the house. I'm mortgaging the house on it. Same thing, unfilled gap, runs up multiple bars into resistance. That's a short. More of the same. But this is one of my favorite patterns. It's the unfilled gap, okay? Now, this is actually the first pattern that I started to trade because it's the most common. You have the market is usually in an uptrend or a downtrend, and most stocks are going to be uptrending or downtrending. The sideways trends are always temporary. They always end up with a breakout or lead to a breakdown. So most stocks are going to be either uptrending or downtrending. And then you have a stock that, let's say, is really bullish. It's the Michael Jordan of stocks, right? And yet investors are bearish on it. There's that conflict again. I want to take advantage of it. So I'm playing something that has short-term weakness, inside of long-term strength. So short-term weakness, long-term strength. Okay. Short-term weakness, long-term bullish stage 2 option. Those I'm playing long. And more of the same. I'm not going to go over every one of them, but that's like picture perfect, beautiful uptrend, and then investors are bearish on it into earnings. They're stupid. I'm just saying, I'm going to play that long. So that's the idea behind doing the pullback play, which is what I started out doing. I hadn't discovered any of the other patterns. That was the first pattern that I did. Of course, when you have a stage 4 uptrend and investors are bullish on the stock, and stage 4 downtrend, and investors are bullish on the stock, I'm going to short it. Okay? I'm going to short it. You see what I mean? So it's multiple green bars into a declining 20. That's a short. And this is like picture perfect. Remember that Columbia Sports chart that I showed you that I said has 11 bars in a row? Well, this has just as many bars probably into a declining 20. It's just so good. So good. Look at that 4-stage cycle, right? Stage 1, stage 2. This is the top. That's stage 3, stage 4. And then investors buy it 10 days in a row into earnings. Oh my God, that's such a good short. Such a good short. Next day, boom, big gap down, big sell-off. All right. So sometimes also the pullback, like I said, initially I started off I only had discovered the pullback play. But I also discovered that a lot of times the pullback play happens after a retest. Like, it's like a W pattern a lot of times. So I call that the retest, but it's a pullback with a retest. So W pattern or an M pattern into earnings. That's a short also. Okay. All right, just sharing with you some of the patterns that I've discovered. Of course, in a stage 2 uptrend, the stock doesn't go straight up and doesn't always pull back. Sometimes it bases. You can play the breakout or the breakdown. So when the stock is basing, that's pretty good too. Look at that. I mean, that's perfect because you're getting narrow range bars. So it doesn't have to be a red bar, by the way. When it's a base, you don't need red bars. As long as you're not getting big green bars into earnings. Those are narrow range bars. That's good. That's picture perfect. Absolutely picture perfect. Okay. Into earnings. So I'm going to play them long. This stock was CDNS, I think, was the symbol, was transitioning. And also was basing for a breakout. Was in a stage 2 uptrend, but pulled back on the weekly and started to transition higher. Beautiful. I mean, just gorgeous stuff. Now, we can also play the breakdown in a stage 4 downtrend. Notice the stock tried to break out here and failed. And then put in a green bar right into the declining 20. That's a short into earnings. That's a short. Okay. More of the same. Now, when I don't want to go short is when I have a big red bar already, like this kind of a bar into earnings, because it means the bear sentiment is already baked in. People are already selling it before the earnings announcement. So I don't want to be shorting it, because if the company happens to surprise even by a little bit, like exceed the estimates, or the stock is going to gap up a lot. So I want, if it's a base, I want narrow range bars, ideally. If it's a pullback, or then I want a green bar. If it's a counter rally, then I want a green bar. So, all right. So I've shared with you, I showed you a lot of charts. Here's a 3-step process for the pullback play, for the pullback pattern. So I want, an uptrend in place, basically. I want panic selling before the earnings report, which increases the probability of the gap the next day, the gap up. And then I want that momentary panic selling to happen at the rising 20. So here's the uptrend, right? Bullish uptrend, that's the first criteria. Here's the pullback, the panic selling into the rising 20. That's what I want. And here's the gap up the next day. And here's the P&L. It's not the biggest or whatever, but there you go. Here's the uptrend. Here's the panic selling, and right into the 20. That's something I want to play long. Okay. Now, I know some of you might think that, oh, that's it. That's easy. I figured it out. It's not as easy as it looks, because you have to know which charts to go after. Like, you have to have a trained eye. And I've looked at millions and millions of charts. I'm not exaggerating when I say tens of millions of charts over the years. Tens and tens of millions of charts. So my eyes are pretty worn out, but pretty trained also. And so I have those trained eyes that look for specific uptrends, not every uptrend, right? The same with when it comes to a downtrend. I'm looking for the downtrend. I'm looking for the panic buying. Here's the downtrend. Here's the panic buying into buying a bear stock. That's GME, your favorite stock. Buying the stock into a declining 20. That's a short. I actually did this during mentorship week when James was attending, who later on became my co-moderator in the strategic day trader chat room. But that was during the week he was attending the mentorship. GME, again, nothing huge. It's $10,000 basically, but a huge gap down. All right, 40%. Now this play is special because it was so good, and I decided to put in it, I think 50K, I believe. So double my risk, basically. So why is it so special though? Because of the following. First, you got the unfilled gap, which I love, right? What else do you see about the chart that you like, that tells you it's lower on earnings? What else do you see? I know I can't hear you, but I'm just asking you to think about it. What else do you see about it that tells us this stock should be lower on earnings? Okay, we have the stage 4 downtrend. We do have it. We have the panic buying. We have the declining 20. But we also have the unfilled gap. We also have the huge breakout on a huge volume bar, and then failure. Did you see that? Did you spot that? If you did, pat yourself on the back. Good job. Okay, so we have, again, the unfilled gap. We have an attempt to break out that failed. We have that which created a big rounding top. And we have the panic buying into the declining 20. What else do you want? All under the 200. And what else do we want? So this contributed to me having my second best day ever, right? Which was, this is a CNDT. I made 22,000 almost after commission, because we had commission at the time. And this, again, was my second best day ever, I think. Again, not including days when when I have Tesla moving, which it really has been recently, as you know, probably, not including those, the long-term account. But I hope you enjoyed this. I hope I'm not saying I always get it right. Look at all these bad plays right there. PBYI, I lost 11 grand on it. SIEN lost 8,600. Yelp, 5,000. Yelp that day, I kind of knew it wasn't going to work, but the picture looked good, so I took it. MTW, I always lose on it, so I don't play it anymore on earnings. I lost 3 or 4 times in a row, and I called it quits on the MTW. So I don't always get it right at all, but when I get it right, I try to maximize my profit, right? So again, I'm not promising $87,000 days every day, but that's something that I was able to achieve before. Hey, Mike, back to you, my friend.
Okay, guys. So what did you think of Sammy's presentation? So I'm very proud of Sammy because he promised me it would be short. I know he made like 6,000 slides, but he blew through them really quickly. So let us know what you thought of Sammy's presentation out there. Let us know in the comments below. Did we just lose Sammy?
You didn't. I just needed to put in a cough pill.
Okay. All right. So, okay, guys. So again, let us know what you thought about Sammy's presentation. All right. We're getting, George says, excellent. And nobody go anywhere because things are about to get good. They're about to get a lot more fun. Christopher, thank you. So guys, make sure you stick around because this is where it's going to get fun. MJ is saying, perfect. I'm looking for him. Very cool. Great. Okay, guys. So do us a favor. So type yes if you want Sammy's earnings trade. Just type in the comments a yes if you want Sammy's earnings trades. We have about 500 people watching. We're getting a ton of people on Twitter. We have people on YouTube. We have people on StreamYard. And we have 3 little people on Facebook. Nobody ever wants to watch on Facebook. But yeah, we have about 5. Okay, we're getting a bunch of yeses here. Okay, Calman, Jacob, George, Jimmy, Enrique. SJ is saying, should I take out the HELOC now? No, we don't think that's a good idea. Not yet. I think we might go to jail if we tell you to do that. Okay, so we're going to talk about how you can work with Sammy. And yep, everybody's saying yes. So this is really exciting. So this is an amazing offer, and people are going to love it. And Sammy, you know that thing that made you upset about that other webinar? It's not happening today. We're not going to say it out loud. But that thing that made you angry, we're not going to do today, if you know what I mean. That's a little inside joke between me and Sammy. Okay, so we're going to invite you to join Sammy's SST newsletter. Now, normally 1 year is $12.95, but because you joined us today, you can get a year for just $6.95. That's 12 months of daily ideas, weekly coaching, plus you get over 200 extra ideas during earnings season. So, but we're going to add more. If you want more, type yes in the chat if you want to get more stuff. If you want more stuff for the same price, just type yes in the chat. And I know you're going to type yes because we all want free stuff. But yeah, so you're going to save right off the bat, you're going to save $600, but we're going to throw in some more stuff. Okay. So, and yes, again, SST includes Sammy's earnings plays. That's his personal long and short lists during the height of earnings season. And he sends those out when there's A+ actionable plays. So sometimes there's 5 in a day, sometimes there's 10. But when earnings season is busy, these come out. So bonus number 1 is the legendary Trading the Pristine Method course. This is the exact course that Sammy took to become a pro. This is a $795 course, and it's included with your $695 purchase. Remember how I just told you save $600 right off the bat? It's just $695 for the newsletter. We're going to add in a $795 course. Again, it's included with your $695 purchase. Bonus number 2. So on July 13th, this Saturday, the live earnings engine class is included also. This is where Sammy teaches all 6 setups, how they work, the money management, the trade management, all that stuff. And you also get the recording in case you can't make the live session. The regular price is $395 for this course. And again, this is also included with your $695 purchase. So if you add it up, you get all this stuff. So $12.95, 1 year of Sammy's SST newsletter, $795 Trading the Pristine Method course, and the $395 earnings engine course. That's a $2,485 total value. And it's $695 for you today. You get everything you see on the screen for $695. All you have to do is go to t3live.com/EE. EE stands for earnings engine. t3live.com/EE. I will also pop the link into the chat, and you can lock in this deal. And we're going to talk a little bit more about earnings, so nobody go anywhere. t3live.com/EE. So why now? This is the important question. You could buy this 2 months ago, 1 month ago, 3 weeks ago, whatever. The reason to buy it now is earnings season is kicking off. We have the banks on Friday, JP Morgan, Wells Fargo, Citigroup. Then next week, it gets really interesting with Netflix and Taiwan Semi. Taiwan Semi is going to be huge because NVIDIA, AMD, SMCI, everything's going to be moving off that. Plus, then on the 23rd, we get Tesla, Microsoft, Google. Plus, there's going to be Apple, Amazon, NVIDIA, SMCI, Broadcom, Eli Lilly, all the big stocks that have been moving like crazy. You're going to want to trade them, and Sammy is going to show you how. Again, if you go to t3live.com/EE, you can get all of this stuff. Okay, we're going to keep going. So this is what Sammy's students have said. So Guru from Boston, one of our top people, he said, if I can rate Sammy 100 times greater than exceptional, that would not be sufficient. Chris from Texas, Sammy taught me to eliminate trades that I would normally have taken, gave me a framework for viewing the markets. Both have added to my consistency and P&L. Zolti from California, Sammy is a fantastic trader and educator at the same time. AJ from North Carolina said, there is no doubt he has become a mentor and role model. Never seen an elite trader as humble and honest as Sammy, who willingly shares his past experience and with his students in a matter we can understand and relate. Yen Kai from Boston, Sammy's earnings plays make me money. I do not need any other trades during earnings season, which is pretty high praise. Again, t3live.com/EE. So Rick is asking, who is teaching the Pristine Method? So that course is recorded. So it's the recorded version. If you buy today, you can log in right now and start watching it. That is not, the Pristine course is not a live course. And guys, if you have any other questions, pop them down in the chat. That includes if you're watching on YouTube or Twitter, we will see all those questions. William from Texas says, for the last year, I told myself I only wanted to day trade, but I just couldn't stay away from SST after seeing the results. Okay. Anis is asking, does Sammy only trade penny stocks? No, Sammy trades a huge variety of stocks. And again, guys, $12.95 for the SST newsletter, $7.95 for the Trading Pristine Method course, $3.95 for Earnings Engine. It's almost a $2,500 total value, and it's $695 for you today. If you go to t3live.com/EE, if you want to be involved in earnings season, this is what you want to be in. So, Sammy, we're going to go through some questions. If you already have, so SJ is asking, what if I already have the Pristine Method? Is it still the same price? Yes, because you're still getting an amazing deal. You're still saving a ton of money. So, if you want it, I would jump on it, because even without the Pristine Method course, it would be an amazing deal. That's why we threw in all the bonuses. Okay, Sammy, so first question. So with your earnings plays, are you looking for specific types of stocks, or are you looking at everything in the universe?
I am looking at everything in the universe. I do not trade stocks under $1. I mean, I rarely do, like once, twice a year maybe. But I'm looking at everything that does a decent amount of volume, that's over $1 in price. And most of the time it's going to be, $20, $30, $40, $50, $100 stocks, not below that. But anything that moves, that's liquid, I'll trade it.
Okay. So Aaron is asking, is Sammy a high frequency trader for his day trades? I guess that means, does that mean, do you trade a lot?
Do I day trade a lot? I think I do. I mean, I average 7 trades a day on average, 7 day trades. Sometimes I also scalp. So I am a busy trader, but high frequency, maybe not so much. I don't know if you know, but high frequency trading systems can do 1,000 trades in less than a second. If the algos were all on and they were turned on, HFT systems can do over 1,000 trades in under a second. I'm not there yet.
Anis is asking, what will be the price of SST after 1 year? So it'll be $12.95 after the first year. You're not obligated to continue on. You can cancel at any time. We make it super, super easy. So we made it very attractive for you to get in. And then if you want to stay on, you can stay on. If you don't want to stay on, you can stay on. And again, we threw in a whole bunch of stuff with this just to make the offer amazing. Again, you're getting almost $2,500 worth of value for $695. So MJ is asking, any crypto? Crypto is not included in this offer.
Well, they get it as part of SST, Mike. I mean, if there's a crypto trade, that's not too late, because crypto trades 24/7. So sometimes I do see a lot of trades, crypto setups, but I can't send them out in the newsletter, because you get the newsletter every morning at like 7:30 a.m. So if I see something that I like in crypto, I'll put it out there. So that's part of SST.
Okay, excellent. Sammy is even more generous than I imagine. Okay, so Jerry is asking, do you give the trades? Yes. So the SST newsletter gives you Sammy's ideas. So the exact trades he's taking himself, you get them every day. And then during earnings season, you also get the earnings plays. So this is an awesome way to get started with Sammy, because you're going to learn a ton. You're going to learn how his system works, plus you get all of his ideas. Any more? We're going to, our time is going to be up soon. Do we have any more questions, folks? All right, Jerry is saying great. So Jerry, I hope you'll join us again. T3live.com/EE, and you can get in today. And the earnings plays will be revving up very soon. The earnings course is on Saturday if you want to attend it live. If you don't want to attend it live, that's totally fine because it's going to be recorded. But again, guys, T3live.com/EE. Do we have any more questions? Just making one last call. Okay, so Sammy, so Enrique is asking, how far ahead did the trades come out? So could you explain, I think, like when you get in and when you get out of the ideas?
Yeah, so basically I get in, so I scan for stocks that are companies that are reporting either after the close on the day that I do the scanning. So let's say today I scanned the list of stocks that are reporting after the close today or before the market opened the next day, tomorrow. So I get in towards the end of the day, anytime in the last hour or so, basically. What I do so that I don't worry about timing my entry or getting the best price is I just submit an MOC order, a market on close order, and it fills me at the exact closing price. So I get in just the day before the company reports, and then I just hold it one night, overnight. Sometimes I've also held the stock for many, many weeks or months to come after the company reported because I like the pattern long term. That most of the time I'm in on, so today is Wednesday, I'm in today, I'm out Thursday. Or I'm in on Thursday, out Friday. So, and I get in at the close and I sell most of my positions at the open the next day, basically, is how it works.
Okay, so Bo is asking, does the offer expire today? The offer expires on Thursday at 4 p.m. So tomorrow at 4 p.m., the offer expires. So if you want this, you want to jump on it now. So Ryan's asking, coaching was mentioned. How does that work? So the coaching is Monday after the close. So Sammy, could you talk a little bit about what happens during the coaching sessions?
So during the coaching, basically, we go over the trades that triggered. We go over the open positions. I go over my watch list, what I'm watching, and I tell you which ones I'm actually narrowing the watch list down to a few, which ones I'm looking to play the next day. I explain the rationale. I answer questions. I do like the coaching part where you're coming to me with questions. You're saying, hey, how do I do this? How do I do that? And I'm explaining it and showing you how I do it myself. So there's that coaching aspect of it. There's also the review process, where we review the open positions, we review the calls that were made that day, we review the plays that I'm about to call the next day. So you kind of, after a few coaching sessions, you kind of get an idea of how my brain works. You might not like it, but how the thought process is that goes into taking these plays, what the thought process is, why I pick that play over that other play. And then I'm answering your questions. If you want me to look at certain symbols, then I'm happy to do that, whatever it is. But that's what the coaching is. And it's on Mondays after the close, every Monday for about an hour or so after the close.
Okay. Another question. So Sammy, do you sell the losing trades at the open as well?
I manage the losing trades just the way I manage the winning trades. And so most of them, they will be sold within 5 minutes at the open. But some of them, they won't, because what if the trade, let's say it was going against me and it went and I was in it long and it gapped down and then it went up and up and up and up and up. Is there a way to actually stay in it? What if it recovered? So most of the plays I get out of within the first 10 minutes at the open. So I do have a management policy or method that I follow, which I will also be teaching this Saturday. I don't want to give away everything. So the management and the share sizing, how to share size, the entry, how to scan for the earnings plays, how to scan the calendar, how to download it, how to sort it. Because I do look at the stocks in sectors so that I can pick the best stock in the best sector. So so I teach you how to do that. So there's a few steps that I didn't cover today, obviously, because it's like a 4.5 hour class. So there is a management policy or method that I follow, and it applies to losing trades the same way it does to winning trades. Mike, I can't hear you. I think you muted yourself.
Oh, sorry, I muted myself. Do you ever use options for earnings plays?
I did try options for a month, and the account went up 25%. I was thrilled about it. And the next month, I gave it all back. And I decided, options is not for me. But there are people that, students of mine that take my calls, but using options, not using the actual stock to limit their risk. I remember on the day that I did the GME short in Chicago, that somebody took a $500 option on, I don't remember the ticker, and made $9,500. I was blown away from 500 to 9,500. That was crazy. He wrote into T3 to tell them about the experience, and for a while, T3 was using that as a testimonial, his email. He was thrilled, 500 to 9,500. It was incredible. But I'm not an options guy. I never was. I like to play equities, the actual stock. And I figured out a way to share size so that I don't get hurt badly, because sometimes I do get hurt, but so that not to get hurt badly in case the stock goes against me. So I just do the actual stock.
Yeah. So Sammy, I actually believe that it was the person who made that trade he traded GameStop, and PVTL was the other one.
That sounds about right. It was with a P something. Yeah,
it
was
about right. It was 100% PVTL. I'm posive. I think his name was George also. Okay, guys, again, so we're going to wrap up here. So guys, again, if you want to take advantage of the special offer, t3live.com/EE. It's only good until 4 o'clock tomorrow. So we hope you'll join up. And Sammy, thank you for joining us.
Thank you so much. Talk to you guys soon.